Namaskar, you're with the Economic Brief, our weekly program on key stories that impact the world of economy seen from Indian shores. Now, on the show, a UBS report sees India becoming the third largest consumer market by 2026 and the third largest economy by 2028. US President Donald Trump says that trillions of dollars have come into the US Treasury through tariffs, helping national security. The Baku to Belém roadmap hopes to mobilize $1.3 trillion a year in climate finance by 2035, far above last year's $300 billion target. With Tesla shareholders willing to give CEO Elon Musk a $1 trillion pay package, the world may soon be moving to trillionaires from billionaires. President Draupadi Murmu recently, while addressing the Botswana Assembly, highlighted India's growing economic strength. Her visit helped boost ties with Botswana, giving India 8 cheetahs to increase the gene pool of the cheetah program in India, and it also gave a boost to the diamond industry while boosting South-South cooperation.
Today, India is the fastest growing major economy in the world. We are on a robust growth trajectory driven by structural reforms, digital transformation, expanding infrastructure, and a youthful workforce, which sustains GDP growth average 7 to 8% annually. India is poised to become the world's third largest economy within the next decade and an enduring growth engine for the global economy. The vision of Government of India of a Viksit Bharat, developed India by 2047 aims to transform India into a fully developed, inclusive, and resilient nation by the centenary of its independence, emphasizing innovation-led industrialization, clean energy transition, global competitiveness, and equitable prosperity.
Indeed, and let's put the President of India's words into context. There was a UBS report that spoke about India's rise as an economic power. The insights from the UBS report of November 2025 says India is to become the third largest consumer market by 2026, and India is going to become the third largest economy by 2028. Let's break that down a little bit for us, for you. In fact, India's consumer market, the market expansion, let's move to the next slide. We can see that household consumption has doubled over the past decade. Discretionary spending is up considerably. Consumer durables, FMCG, multi-brand retail outlets up about 72%, in fact, consumer durables in the FY25. And this is because there's been a strong demand also for home appliances because people are beginning to own homes. And electronic manufacturing also has seen a considerable amount of increase in manufacturing. So in 2024, our consumer market was at the size of the order of about $2.4 trillion, but that is in actual terms. If we look at PPP, India would be about $9 trillion in terms of its consumer market size. Of course, the US and China are ahead, and if the European Union also, if you take it collectively, they are all ahead of India. The US at about 17.5 trillion, China at about 12 trillion, and the EU at about 11.5 trillion. But that's all in PPP terms. In real terms also, in actual terms, they are also much higher at the current time. But let's move on to our next slide and put this into context, because what this implies is that there is very strong demand. Consumption is increasing, and India's growth FY27 is seen at about 6.4% and FY28 at 6.5%. Despite the headwinds, we know that the world is undergoing some sort of economic change with the tariffs, and there's a new realignment taking place. And China is seeing FY27 at 4.9% and FY28 at 4.5%. So let's move on to our next slide, and we are now looking at certain risks that UBS has pointed out because of the US trade policy uncertainty is what they call it. There's going to be an impact, they say, on employment, on consumption and investment, but the figures don't seem to suggest that, and they say that this could lower growth by up to 90 basis points. But you know, we are seeing that there is a lot of export growth as well, because Indian markets have moved away from the problem that the US has created and have actually realigned and found and sort of redirected their shipments to other markets. Let's look at the money flow, and we can see that the RBI then is expected to cut the repo rate by 25 basis points. It didn't do so in October. In December, it might do so. The current rate is at about 5.5%. It's likely to bring it down. That's what indications show, because inflation is very much under control. And there is also the growth, there's a goal to stimulate growth in FY26. And they believe that this is likely to happen. I mean, their expectations are by 31st March 2026, definitely more likely by December of this year. Let's look at, you know, the India's growth strategic implications. What this implies is that the policy is in the right place. It's good policy. We are seeing stable trade relations because India is making you know, these trade agreements with various nations, and domestic policy is also showing agility because there has been support for the MSME sector and also the small and medium enterprises, and even you know, industry is being given, manufacturing is being given a boost. And there is also continued investment in infrastructure, which is creating the multiplier effect, which is going to help the Indian economy to sustain that growth. So in conclusion, let's understand that India is on track to become a global economic powerhouse, and that the consumer has the strength of the consumer and GDP growth. These are the key factors that we can see are driving the economy. Vigilance is also needed, they say, because on the external risks point of view and policy responses, but as I was saying a little earlier, the government of India is seized of the matter as far as that's concerned. Before we move on, let's look at the Solar Energy Corporation of India recently held a green hydrogen tender that discovered the price of 49.45 rupees per kilogram, you know, making it marks a major milestone in its clean energy ambitions, because this price is much less than in Europe and the United States, and it positions India as a cost leader, in fact, in green hydrogen production. Now, production is expected to begin between 2026 and 2027, with full-scale capacity ramping up by 2030. Here's India's Minister for New and Renewable Energy, Prahlad Joshi, on the subject.
As we all know, India is marching ahead as far as green energy is concerned, and the green hydrogen is also concerned. The recent SECI tender, which has discovered the price of 49 rupees 75 paisa, that is the lowest in the world. That itself speaks how India is positively and quietly progressing towards a new era of transmission. So I am very happy about this. And since we have also assured the world about the export stability, many countries are interested, and all our pilot projects, including the movement of 37 vehicles, they are going very, very successfully, and bunkers have been also established. And after the launch of this mission in 2023 under the dynamic leadership of Prime Minister Shri Narendra Modi, we are in real terms, we are heading the globe in this matter.
And we are joined by Prasenjit Basu, economist and award-winning author. He is here with us. He's brought out a new book. Thanks very much, Mr. Basu, for being with us. Now let's look at what's driving India's consumer market. What would you say?
Well, this year in particular, what is driving it is, of course, that we've seen a substantial reduction in income tax rates for everybody. We've seen a big reduction in the GST rate, an effective weighted reduction of a little over 2 percentage points. And that has brought prices down across the board. So inflation is almost zero, 0.25% year on year in the latest month. So all of that is contributing. But broadly speaking, what is helping consumption, of course, is the continued growth in incomes. We have the fastest growing economy in the world. UBS apparently is forecasting 6.4% growth, but the lowest growth rate we've had in the last 4 years is 6.5%. I think this year we're going to get comfortably more than 8%, closer to 8.5% real GDP growth this year, given those reductions in tax rates, as well as the continuing reductions in interest rates that are coming through. We've already had more than 100 basis points in the calendar year so far, and we're going to see more. So all of that is contributing to a strengthening of consumption,
Right.
and that will continue to occur over the next few years as well.
Indeed, and your new book is called India Reborn. So how much of it is focusing on, I know it's more largely historical, but the economic aspect of being reborn is very important. In terms of consumer demand, buying, are we buying sort of out of income that's postponed? I mean, through borrowings? Is that what's driving this demand? And is that going to be a bit of a problem?
Not at all, actually. In fact, if you look at what has happened with credit growth over the past 11 years, it has averaged slightly less than 10% a year, which is very moderate. When you look at the previous 10 years, the average growth of credit over that 10-year period was over 20%. So we've seen a substantial moderation. Broad credit growth is much more sustainable now. Over the last 11 years, it's averaged less than 10%. So in real terms, that is very moderate growth.
Okay.
And that basically means that overall debt levels for the household sector are not rising that much, despite some strange headlines that one sees along the way. Household debt is rising a little bit faster than corporate debt. One would hope that corporates will borrow a little bit more in order to invest. I mean, that is the one area where there is a little bit of weakness in the economy. But
Okay.
if you're growing 8% a year, average growth of the last 4 years has been 8.2% in real terms. That is very rapid growth, and that, of course, contributes to strengthening consumption as well.
Let's move on to our next story. Do stay with us, Dr. Basu. Now, as the U.S. Supreme Court weighs the legitimacy of, the U.S. President Trump's policies, President Trump, he's doubled down, not just defending his approach, but he's redefining it. He says tariffs are, more than just fiscal tools. They are the backbone of a strong America capable of delivering direct dividends to its citizens and slashing a towering national debt. Here are his words, in fact. U.S. President Donald Trump on Monday discussed tariffs and the future of America's economic security with reporters at the White House. He was speaking in the context of the U.S. Supreme Court considering the legitimacy of his tariff policy, arguments for which have been made, and the decision pending. Trump painted a picture of a nation once vulnerable, now fortified by his administration's aggressive trade policies. Tariffs, he argued, weren't just taxes. They were shields, tools of leverage, and sources of national strength.
This country would be in such trouble, as they were for many years. That's why we owe $38 trillion. And one of the things we're going to do, we're going to issue a dividend to our middle income people and lower income people of about $2,000. And we're going to use the remaining tariffs to lower our debt. We're going to be lowering our debt, which is a national security thing. So we're doing a lot of good work.
The announcement caught everyone off guard. Trump was suggesting this wasn't just policy but a promise a direct payout to the people, funded by the very tariffs that had reshaped global trade. But Trump wasn't finished. He said the tariffs would go towards lowering the national debt, a national security issue, further highlighting the strength of his court case.
The numbers were reported so incorrectly. The real numbers are trillions of dollars have been taken in or gotten in terms of investment from the tariffs. And so if that were ever reversed, it would be a disaster. Frankly, it would be a national security problem for our country. And nobody thinks it's going to be reversed. I think we had a very good court case.
Trump criticized the media for misreporting the numbers, claiming that trillions, not billions, had flowed into the US through tariffs and foreign investment. The stakes, he said, were enormous. He dismissed critics who downplayed the impact.
If you look at the past administration, Biden, he did less than $1 trillion in 4 years. We're over 18 trillion. By the time my first year ends, we're going to have over $20 trillion of investment coming into the United States. It's unheard of. We have AI factories. We're leading China by a lot. We have cars and car plants coming in by more than we've ever had built before. All of that would go away if we lose the tariff case.
All of it, according to Trump, hangs in the balance. A message of urgency, ambition, and a vision of America built on tariffs, factories, and a fight for financial sovereignty. The question is, do his arguments make economic sense? Some would say they do add up. The Economic Brief, DD India. So let's turn to Prasenjit Basu once again to find out whether his economics does add up. What do you think? I mean, do the numbers add up?
On one thing, it is clear the tariffs are bringing in substantial new revenues. There's no doubt that as a result of that, the US deficit, annual deficit, is going to be a lot lower in the last fiscal year and the current fiscal year. The fiscal year in the US runs from October to September. We don't have the final numbers yet, but the monthly numbers already show a substantial reduction in the deficit. So that is true. It is having an impact because tariffs have two functions. One, of course, they bring in revenue to the government. The second is they provide a form of protection to domestic industry. The protection aspect hasn't really significantly boosted US industry much. We see in some areas like steel, automobiles, we're beginning to see some benefits to the US. And the other thing that he's talking about is that he is forcing many countries to promise massive amounts of investment. And in fact, some of that is coming through. So for instance, TSMC from Taiwan is building a lot of significant plants in the US. Samsung Electronics from Korea is doing the same. Several of the major automobile companies from Japan, Toyota, Nissan, Honda, are expanding their presence in the US in terms of production. So there are some benefits coming through, there's no doubt about that. But the argument in the Supreme Court is not about economics, it's about the legality. The lower courts have ruled against it. In the Supreme Court, Trump has a very strong majority in his favor on most cases, 6-3. It is possible that one or two of the judges will defect, but that should still leave him enough to win the case. It's a dicey case. Whether there's an emergency or not is very questionable, but most likely he'll win the case.
And what about paying a dividend? Is it even possible in the United States to pay
absolutely.
to every citizen?
He's not going to pay to every citizen. Apparently, he's only going to pay to some to the middle class and lower income earners. It is possible, of course. Both Trump and Biden did that. Trump did it in December 2020, and then in March 2021, Biden came in with a big so-called stimulus check. So you can call it a dividend, you can call it a stimulus check, but whatever it is possible to do. But anything he does of that sort will reduce the deficit reduction that is happening. So instead of reducing the deficit, they're going to pay out some of it in the form of dividends or a stimulus check, which is not really needed at this point, given that the economy is in reasonably good shape in the US.
Okay.
And inflation is actually a little bit, it's picking up. It's 3%. Right. The latest CPI number in the US is at 3%. It's not particularly low. So we don't really need, the US doesn't need a stimulus.
Fair enough. We leave it there. Thank you very much, Mr. Prasanjit Basu. Thank you for joining us and unpacking those stories for us. Moving on to our next story, Brazil is taking center stage in global climate diplomacy as leaders, scientists, and activists gather in Belém for COP30, the 30th United Nations Climate Summit. The focus is shifting from promises to implementation, with rising demands for climate finance and renewed urgency to honor the 1.5 degrees. The talks could shape the future of both vulnerable economies and the planet itself. Diptanshu Kashyap explains.
Leaders and delegates from around the world have gathered in Belém, Brazil, the gateway to the Amazon, for the 30th UN Climate Summit, COP30. The goal is clear: to prevent the worst impacts of climate change through global cooperation. This year's host city is putting indigenous peoples, forests, and agriculture at the center of the talks, while Brazil promotes a new Tropical Forests Forever initiative to reward countries protecting vital ecosystems.
Esta, portanto, é uma COP de implementação.
This, therefore, is an implementation COP. I hope it will also be remembered as an adaptation COP, a COP that will advance the integration of climate, economy, and activities, the creation of jobs, and above all, a COP that will listen to and believe in science.
As COP30 opened in Belém, small island nations called for the world to honor 1.5, describing the Paris target as a lifeline for their survival. Their plea followed the devastation of Hurricane Melissa in Jamaica, which caused losses worth nearly a third of the nation's GDP. The demand is clear: accountability and financing for those least responsible yet most affected. The summit's opening also saw rare indigenous protests for stronger recognition inside the blue zone, even as Brazil worked to bridge deep divides over trade, transparency, and fossil fuels.
I want you to know California is a stable and reliable partner. We are doubling down on this agenda. Folks in Washington, D.C., they may come and go. California's commitment is strong, and we're in this for the long haul.
Behind closed doors, Brazil is working to forge consensus on the toughest issue: climate finance. Developing nations are demanding a credible roadmap backed by real funding, not promises. The Baku to Belém roadmap seeks to mobilize $1.3 trillion a year in climate finance by 2035, far above last year's $300 billion target. For vulnerable economies, it's about both survival and solvency. As talks continue, Brazil hopes its COP of implementation can turn pledges into policy and ambition into action. Diptanshu Kashyap's report for the Economic Brief, DD India.
And the world is on the brink of a new milestone in wealth and inequality. Tesla's record-breaking pay deal could make Elon Musk the first trillionaire, signaling a seismic shift in global markets and also the concentration of corporate power. But as fortune saw, questions are mounting about what this means for workers, wages, and the future of capitalism itself. We'll leave you with this report. Thanks very much for watching the Economic Brief. See you again next week. Namaskar.
The world's first trillionaire may soon be crowned, and it could be Elon Musk. Tesla shareholders have approved a pay package worth up to $1 trillion over 10 years, tying the CEO's fortune directly to the company's market value. The move cements Tesla's dominance in global equity markets and highlights how a decade of easy money, tech growth, and investor euphoria have created unprecedented concentrations of wealth. If current valuations hold, Musk, already worth more than $460 billion, could soon join the ranks of trillion-dollar wealth, and his peers like Jeff Bezos, Mark Zuckerberg, and Nvidia's Jensen Huang may follow. But economists warn this isn't just about one man's fortune, it's about the structural imbalance between capital gains and wage growth. While US equity markets added 12 trillion US dollars in value last year, real wages barely moved, widening a divide that policymakers are struggling to close.
The 5 top billionaires have doubled their wealth, and almost 5 billion people, that's 60% of the population, that's become poorer. So that's what is happening, and this is a decade of division. A decade of division where Oxfam predicts that within a decade we'll actually have a trillionaire. And this is happening when almost 800 million people have not been able to have real wages keep up with inflation.
Analysts say the trillionaire era signals more than extreme success. It exposes how much of a global prosperity now depends on stock performance, not productivity. With US markets near record highs and corporate taxes near record lows, calls are growing for a new fiscal compact, one that rewards innovation without leaving workers behind. Because the question is no longer whether the world will see its first trillionaire, but what kind of economy will emerge when it does. The Economic Brief, DD India.